Okay guys, let's have a look at the DAX. And a warm welcome to one and all. If this is your first time here, the overgrown child, that is the Scruffy trader. And sitting next to me is Snuffle Pig Winky, who seems to always have something in her gob. Just as well, because if there's nothing in it, it doesn't shut up. It makes a noise constantly.
It's breakfast time.
It's breakfast time. It is. It's early morning, boys and girls. And we're looking to earn our wages. So what I'm going to do today is, well, just going to do what's called price trailing on a DAX movement that I've already identified. Now, if you bear with me, I'll just flip this over. What I've done already for the guys, this is our Discord, where we have a chat about everything. Doesn't matter what it is. If it's your Forex that you're looking at, if it's your indices you're looking at, all sorts of different. But I put in biases all the time. And a bias is basically giving them a heads up of what I'm looking at and the direction I'm going to trade. So initially it's a buy. It's green, so that means it's good to go. In other words, I'll watch it for the next hour. But I take it a step further for them, where I will break down the entire trade with the how and the why I'm going to take it in the first place. And this is done before the trade's taken. Can't be any fairer than that, guys. I really can't. So what are we looking at? Well, like I said, I'm going to be doing what's called price trailing. And that's because it's getting ready to cook. So you drop an order in that is above the recent candle, which is there. So my order is above this candle, and you follow it down with a view that the price has to take you in. It's a very simple way of managing a trade. Now, if I put that there and then just target to the next roadblock. Well, there's a roadblock there, which is why the target is here. And the idea is it'll slam in, pick it up, and then take it to the roadblock. And if it is going on its journey downwards, well, let it. But in the meantime, I've worked out that I wanted to go to the upper side. Now, what happens is, as you can see, this hasn't come up to reach it as yet. You just let this play out. And then when this closes, if it is red and it is going this direction, I will move the price to the top of here. If it turns green, then the price stays where it is. Why? Because you're assuming that there is a turn in the tide and you don't want to chase the price. You just want the price to naturally come up to meet you. Simple premise, guys. Simple premise. So where did the premise come from in the first place? Well, if I come out to the hourly, we can see there was a drop here, consolidated, made no attempt to go back up, but there was a lot of tail starting to come to the underside. It dropped off again. It's had a good go at trying to get up, as you can see with these big bodies, but every time they came in, the sellers pushed it down. But it eventually found this level. It's dropped off, and it hasn't really made any attempt to go any lower. And the greens, as you can see, is definitely overpowering the sellers at this point. The worry is this, because that showed a massive move up and then it was pushed down, but it did stay green, and now we're into red. So the basic theory is the buyers are there, and at worst they'll push it up back into this level before it goes downwards, which will give me my trade of my 10 to 20 pips, and I'm quite happy with that. And then all I'll do is, if I'm triggered in, I'll stage to the base of this candle a swing point, and then if it breaks the base of that, I'll assume I'm wrong, and it's just, well, I'm wrong, and I've got to take my medicine. Simple as that. So what I'll do is I'll drop this back down to a 5 minute, just so you can see everything dance. Do kind of like a 15-minute chart, because it helps marry all of this out. But if you are using a 5-minute chart to monitor, all you do is 9:15, count 3 candles back, 9:30, count 3 candles back, and it'll give you your 15-minute, or just do it the easy way and flick it onto a 15-minute chart in the first place, and it'll show you where it is. Simple stuff, guys. Simple stuff. So there we go. Anyway, I'll catch you when the trade is done. Okay guys, this is pushing up, as we can see. It's all I've got in, and I've done nothing else this morning. Looking for 200 quid, which is in now. So all I need to do is just go boom. That's it. I'm done. And what has it done? 205 quid. Now, just close off these orders. And why have I done what I've done? Well, there's 2 reasons why I've done what I've done. I don't like tempting fate, and it's Monday. It is in the face of a downward move, but I was waiting for this kind of little explosion, what we're seeing here. And the way it was done was, if I just move this back out to a 15-minute, this showed me the volume coming in. We have, as you can see, you've got your low here, you've got your higher low, and then this one's roughly the same, but the consensus was a move to the upper side. There's the explosion, where anything that moves that quick can't really sustain, so it had to sell off, which is here. Now it came down, well, it came down a bit further than I thought, but it didn't come back down to this, which is why you trail your price. And if you trail your price down, it just means you're getting in at a better sort of position to take your profit, and then the trade doesn't have to work as hard to get to your said figure. Now, as you guys know, I like to work 200 quid. As soon as I've done 200 quid, I am done. I don't need to be a hero and sit in the markets over and over. I really don't. And that's what makes me consistent. And yes, you can have the argument of saying, well, if you let that run, you have so much more. Yeah, but if I let that run, I'm in the market longer. And the longer I'm in the market, the more chance it is it's going to take it off me. It's that simple, guys. And if you keep your trades simple, you're fine. I work on sort of, how do I put this? It's a principle of win rate, shall we say. I have a high win rate because I like to get out when the market's on top. I don't like to hold on to the market and pray. And I think that's the difference between a trader, an investor, and a gambler. You know, The investor will hold on for the big move, what they've already calculated based on daily charts and weekly charts, etc. So they're kind of waiting for that. But the principle they look at is roughly the same, because if the daily chart shows similar ideas as to kind of what I look at, I mean, if I flick this back, I was right to pull it out because it's going red, it's going the opposite direction. And that's the thing. You take the money when it's offered to you, and that way you're fine. The trick is not to be greedy and go back, because I've been paid today. It's now 10:15. I've had this trade idea, as you've seen, for the last hour. So this hour and the sort of half an hour prior to the trade being taken, having a little bit of an analysis, has paid me for the whole day. I can do what I choose now. So if you keep an eye on the community and my Facebook, you'll see pictures of me in the woods while I'm having a walk with Winky. Now, to me, that's a good job. That's the way you should trade. And talking of following me, if you do want to see further updates, do click the subscribe. It genuinely helps, as does the like. The more likes the videos have, the more motivated I am to do more. And if you've got queries, drop them in the comments. I answer every single one, as I answer every email or message that comes to me. And you'll find all those details in the description. And if you want to have quick updates, just follow me on Twitter. The feed's there as well. So as I'm saying, that's my day done. I can do as I choose. And the best advice I can give anybody that's coming into the markets is less is more. I had a conversation with a guy at the weekend, and he's a good guy, but you need to step back, not think anything of money, because if you have a small amount of money and you can't fund an account, and you're not going to make a wage out of it, let's put it this way. If you've got less than £1,000 in an account, you are not making a wage. You're looking to make £100, £200 a month. And if you think of it this way, well, I put £1,000 in the bank, I get £200 a month. Well, over 10 months, that's £2,000. That's just paid my holiday. That's how I think. And then if you get 2,000 in, obviously that amount increases. You've got 10,000 in, even better. And if you get up into big accounts, into the 50 or 60, 70,000 accounts, suddenly these wages that you see being made are there all the time. And just to flick back, just so that you can see, I was absolutely correct to pull that when I did. Okay. So there you go. Just a few thoughts from Scruff. Remember, it takes money to make money. When you see these clowns telling you you're going to flip 200 quid into millions, la la land, absolute la la land. Trading is a professional career, and you've got to treat it with the same respect as you would a job. You know, and if you do that, it'll pay you as a job, as you were saying. So as always, guys, trade well, keep your risk managed, don't gamble, but above all, do what you love, and the money will follow. See you all in the next one.